It is Friday, March 3rd, and let me be the first to say happy birthday to my sister. Anne, happy birthday. Hope you have a wonderful day, wonderful weekend, and all of that stuff. But let's get into the financial news. We got to talk about another default in the commercial market. This time it is Blackstone. We heard earlier from Brookfield and PIMCO, and now Blackstone. Well, a couple of things we need to kind of realize and talk about. These are not your normal defaults, right? These are loans that are packaged in what is called a CMBS. Think of it as a bundle of other loans. So this is not like Blackstone doesn't have the money. This is basically Blackstone forcing a renegotiation, right? Because this loan is inside a CMBS, the only way that they can force a renegotiation, or at least have that conversation, is by defaulting. And that is a process that is going to go on more and more. This is why I have been warning about the commercial space for quite some time. We actually had 3 wonderful conversations with Jonathan Twomley yesterday, where we highlighted a 50% drop in value is actually pretty easy. If you haven't seen that video, I think it went out yesterday. It talks about how a building, I believe, could be worth $25 million one day, and then very, very easily be worth less than $9 million with just a slight tweak in vacancy and cap rate. So again, folks, a lot of folks out on YouTube are talking about residential, where I believe and have believed for a long time, the real pain, the real nastiness is going to happen in commercial. It is and has always been about debt. If you get addicted to debt, short-term, variable, bad assumptions, you are going to pay the price, and there are a lot of people that are going to pay the price. PIMCO, Brookfield, and now Blackstone will not be the last. There will be many more. And unfortunately, I believe PIMCO, Brookfield, and Blackstone will all successfully renegotiate. But the syndicators who were new with short-term debt, value-add projects that got, it is going to be painful. And if you don't understand how a building could one day be worth $25 million, and the next day be worth close to land value, please watch the video with Jonathan Twomley. He has his own playlist. It is eye-opening to potentially see an 80% drop in value. Mortgage rates yesterday went over 7%. I think they were at 7.1%. We are back above 7. For those of you that don't recall, I think we peaked at 7.37 last year, maybe in October or November. Yes, we are back above 7%. We are going to see supply constrained again, because again, the interest rate lock-in is real. We are also going to see demand destruction because affordability is at or very near record lows. Nordstrom's beat top, beat bottom, very low expectations. Again, they lowered the bar, but they did beat top, which means revenue, and bottom, which means earnings. They do expect sales declines the entire year. Yes, folks, we have gone from buying stuff to buying experiences and services. In addition to that, Nordstrom's looks to be exiting the Canadian market. We have some more earnings. We have Zscaler, beat top line, beat bottom line, but gave weak guidance. Dell, shout out to the team at Dell. They beat top line and beat bottom line, which again, very tough space to be in, right? A lot of us bought our computers and kind of stocked up, but maybe this is return to office. I don't know. But that was, I didn't expect that one. So shout out to the team at Dell for executing well. Marvel beat on revenue, but missed on earnings. What does that mean? It means they sold enough stuff, but the cost to sell was higher. So they took margin hit, which will hurt earnings. Don't know if you know this, but there was recently a review of the top 5 cities for work-life balance. This is a worldwide survey. I've actually been to all 5 of these cities. So do me a favor. Think about cities around the world and take a guess. Leave a, pause the video and put a comment below. Again, this was work-life balance and happiness rating. So the top 5, we will go backwards. There is actually one U.S. city which kind of surprised me, but here we go. Number 5, Zurich. Zurich's annual average income is $82,000. Oslo, $46,000. New York City made the list. Shout out New York, 71 grand. Amsterdam, 44K. And then Copenhagen, Denmark. Copenhagen, Denmark comes in as the #1 city for work-life balance. Pretty interesting stuff there. Unemployment, new unemployment came out Thursday, actually came in low. Remember, I think Powell needs 325,000. We went down to 190. Yes, the week before was 192. So all these layoffs we keep hearing about, it's not showing up in the numbers. Will it ever come? Maybe, probably, but certainly isn't coming as fast as people had talked about. David Einhorn is talking about investors should be bearish on stocks and bullish on inflation. I think that's right. And I think that's what I've been warning you for quite some time. I think inflation is stickier. It will be around longer. I've been telling you there are 3 components: goods, housing, and services. I think it is playing out a lot like we have been talking about, which I feel good about. Raphael Bostic came in yesterday afternoon and saved the market. I don't know if you saw a big turnaround in the stock market yesterday, but basically Raphael Bostic came out. He's one of the Fed presidents, came out and said, I'm in favor of lower and slower rate hikes. Folks, this is what I thought was coming. This is what I talked about. We're going to get Bernanke, which means just 25 basis points. They're going to come out occasionally and talk tough and all of that stuff and put on the table 50 basis points, which I think they should do, but they're not going to do it. They have done 450 basis points already. They know there is a lag. The last thing they want to do is go extra right at the end here. So we're going to get 25, 25, and maybe another 25. We're going to get to 5%, which is what I've been calling for a long time. And then we will get to potentially 5.25. But we are closer to the terminal rate now than we've ever been. iPhone supplier Foxconn is really committed to building out outside of China. They are now announced a factory in India. I think this is going to have implications as people move out of China and go rest of world. One thing I've been doing a lot today, I normally don't record videos, is look at the 50-year spreadsheet. Again, it's something I give away. I think there's just a real lesson in the 50-year spreadsheet. If you look at the years 1979 to 1984, I just think there's 2 things that I took away. One is it takes longer than anybody wants, right? We all want to get to the bottom or get to the plateau so we can build and get out of it. It just doesn't work that way, at least historically. And I think we need to remember that, right? We all kind of want the V-shape or U-shaped bottom so we can just get back to growing and get back to feeling better. It just normally doesn't work that way. We've pumped a lot of money into the system over the last 2 years, and there's a price to pay for that. The other thing is, I think we all should root for Jerome Powell. What I mean by that is we want him to beat inflation. We don't want him to give up too early, right? One of the things that we saw in the early 80s is we thought we had it beat, so we backed off and we had to go higher. That period, I remember as a child, was tough. That double dip recession, that cutting rates and then raising rates. The federal funds rate, I think at the second time went over 20%. 20. Now, I'm not saying we go back there, but I'm saying, hey, let's say we get to 5.25. Jerome Powell and his cronies back off too early. We come down to 4% or 3.5%. And then they have to come back out and take us to 7 or 8. So I personally am rooting for Powell to have the guts to stand in, because he is already probably hated by many. If he has to stay in longer than people thought, he's going to have to stay. He's going to be even more hated. And there are going to be calls for his head and all of these things. So I hope he has the guts, the fortitude to stick with it and truly beat this. I do not want a double dip. I don't want us to cut early. I don't want to see inflation come back bigger and harder and have to raise again. And then finally, Neel Kashkari, another Fed president, out talking, basically highlighting that inflation is in wages is too high. Basically saying in order to get back to 2%, we need to get wage inflation down to 3%. Else, if wage inflation stays at 4.5%, 5%, 6%, there's no way we can get to 2% inflation. And that is exactly right. I've been telling you that the third step of inflation is wages, aka services. And that is going to be really hard. it's going to be really hard to beat. So at the end of the day, folks, I hope you enjoy this. Record it, I'll get it posted. Normally we do these live, but on Friday and Saturday, I'm just going to be more loose with it. I'm going to record it. And I don't know if you guys know, but I am out for a walk with my puppies. Hi, Happy. Hi, Sonny. Okay, we're going to go for a walk. All right, guys, take care. Happy birthday, Ann. Bye.